Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. We have about 4.5 minutes left before the market closes, and I just wanted to show you some very interesting things I'm seeing on the chart here. On the minute-by-minute chart, I had just gotten off the phone with one of our VIP clients. His name is Rob, and as we were speaking, the Dow dropped 200 points in just about 10 minutes. And this is the kind of day that we're having with the CPI numbers coming out before the market opened at 8:30. There was a knee-jerk reaction anticipating that the Fed perhaps would cut rates. So I guess you could say the optimism came into the market even before the market opened. And then Fed Chairman Powell came out and put the kibosh on interest rate cuts, stating that they would leave the rates as is. Now, taking a look again back at the daily chart, you can see that we have hit my downside target on the diamonds at 386.32. So we're doing a good job over the last couple of weeks hitting these targets. And we're very close to a bearish engulfing. Again, with 3 minutes to go, I doubt very much it's going to drop on the lows. But that is a very negative candle, being that it failed to get back up over that 20-period moving average. Now, if you recall from last month, I put out a video talking about the role reversal and how, if you see back here, the moving average acted as resistance. It broke out. Then it broke back down below the support level here, which again is that moving average. Last Friday, it tested as resistance with that shooting star, came right back down. Then here we are again, failing to maintain a level above that 20-period moving average. So for the rest of the week, I think we could go a little bit lower, perhaps testing the lows from yesterday. I'll wait until Friday to draw my longer-term forecast lines for targets for you option traders out there. Remember, a week from this Friday is options expiration week. And so we are going to be putting out a lot of trade notifications to our members to get the rollouts done, which is where we collect cash. Today, we had two great positions, one in OIH and one in Restoration Hardware, where we took in a bunch of cash today. And so we continue to do the roll, or as I often refer to it, as doing the dance in the option market. If you're interested in learning how to trade options, just come to StickyTrades. We've got options classes that you could plug into and learn at your own pace. Going to IWM, as we're coming into the final minute, you can see again, we hit that downside target of 198.95. That was that green line that we have right there. I can now take that off now that that target has hit. And here we are bumping our heads up against resistance once again. And so with a gap below the market, I think we could drop right back down to fill that gap. Again, this was a knee-jerk reaction to the CPI. Again, nothing really fantastic about that. But evidently, we moved the market on that emotional content, and the Fed took the air right out of that balloon very, very quickly. And so here we are into 13 seconds left. I think we're going to go back down by the end of this week and fill that gap. That is IWM. And coming into SPY, as you can see here, we have a shooting star right at the close. That is a shooting star. That is a bearish candle. And with that, you can see the wide divergence from that moving average. That's called the rubber band effect. So I'm keeping that downside target on SPY at 527.07. And I don't want to skip over the Qs because the tech-heavy ETF here is being driven once again by NVIDIA, which is up quite a bit in the post-split era. And we have Apple buying back their shares, pushing up tech again. I think there's a lot of hot air going into that bubble as well. So be very, very careful. You long position holders, I would suggest that you do something to protect your profits and absolutely manage the risk to the downside. I'm keeping the downside target of 455.89 on the Qs For some of you, that might seem like a big stretch, but it really isn't when you come to think about it, because when you look back at the monthly chart, look at how vertical the tech has gone. And down below, while we are reaching for higher highs on the Qs, we're showing lower highs on the oscillators. That's known as a negative divergence. So I pay more attention to the monthly charts than I do the daily, but I'm keeping that downside target, like I said, on the Qs at 455.89. Now, finally, the VIX. We did not get a follow-through on the pivot from yesterday. That was more of a doji. You could see that it's colored gray right there. That's when the opening and the closing price are equal. So there's no color to that candle. That's usually a sign of indecision. Now, while we could go a little bit lower by the end of the week, I think ultimately we're going to hit my upside target on the VIX at 1363 and then on to the higher target up here at 1838. Folks, we are past the 11,000 mark with regard to new subscribers. Thank you so much. That's all of you sharing and liking, doing all of the great stuff to get us on the menu. Keep doing that, please, especially your comments. That really helps us quite a bit get to the front page of the menu. And tonight from 6 to 7, we have the rapid fire stock analysis session where my goal is to go over more than 60 stocks in that hour and hit those targets that we're doing such a good job doing. We're hitting 83% of our price targets on that service. So that's our most popular weekly webinar that we do. If you're interested in that, just come over to Sticky Trades, plug in. We got a 15-day free membership. You could try it out, kick the tires. If you don't like it, you move on. If you like it, come join us. And so that is it for today. I'll talk to you later on tonight from 6 to 7 on the webinar. Take care. Bye-bye.